Welcome to part 2 of our S10 webinar. Again, I'm recording this session so that when we're done with this one, I'm going to be merging part 1 and part 2 together and posting it to our YouTube channel, our WPS YouTube channel. And then I'll send out another email to the same group that I sent out the reminder this morning with the YouTube link, as well as I believe I was going to send out the charity care letter. Somebody wanted a copy of that reminder letter that was sent out, and also the question listing that we copied from last time, as well as any that come up today. I'll make sure to include that as well. So it might be at least a day. It probably won't be today. It'll most likely be tomorrow, or maybe even the Thursday, just depending on how long it takes to get through some of those questions and provide responses to them. So with that, we'll go and get started this morning. And we left off right at the template, the S10 template. We started talking about the questionnaire, but we ran out of time there. And I think we're going to take a different approach this morning. I think the questionnaire may make a little more sense after we've gone through the listings themselves. So we're going to go through the charity care listing, the patient payment listing, and the bad debt listing. And then we're going to come back and look at the questionnaire from top to bottom. And really the questionnaire, what we call the query logic questionnaire, is just, it's your ability to explain how you queried your systems to get the information for these templates. Now, that's always been required. Some sort of explanation has always been required. Let me see. Are you guys able to hear me? Somebody's responding that they cannot hear me.
I can hear you fine.
You can hear me?
Yeah, I can hear you.
I can hear you.
Chris.
Huh. Let's wonder why somebody. Oh, that was probably 9. Okay, that was 9:59. They responded before we started. Okay, sorry about that. Let's see. So the query logic questionnaire. Again, it's your chance to explain how you queried your systems to get the information for these templates. So again, the query logic in some level has always been required, and usually it was just some sort of narrative explaining what you did to get the information. But based on a lot of the questions we've had over the past couple of years, we decided to put this into a questionnaire format, which serves almost as a training module or checklist along the way, making sure there are certain things you don't forget when you're putting the listing together. So that was really the intent of that, but we're going to go through that after the checklists. So what I want to show you, what you should be seeing on the screen right now, is an Excel spreadsheet with 6 different tabs to it. The first one is really just cost reporting instructions. You can find those in the cost report itself. We just put them there just to make sure they're readily available. The instructions tab itself. So a lot of this is just pretty high-level generic information. However, I do want to point out at the very end, we have some notes. Now this, by the way, depending on which version of this form you've used, if you're still looking at a version from last year, early last year, it might not have all of these notes. These are notes that we have added ourselves. So, you know, if you're dealing with other Macs for other audits, then you may not see all these notes. This is an adjustment or a revision that we made internally, again, based on feedback, based on things we were seeing. So we're going to go through these notes. That's probably the most important part of this instructions tab would be these notes. And the reason I say that is that, again, these are all revised just slightly from what CMS initially put out at the beginning of the audits 2 years ago. But the slight revisions include references to those notes. It's trying to explain what that column is all about. So we're gonna look at that instructions tab just when we come to those notes, just to explain what that's really for. Okay, so we have the columns. We'll talk about the labels and the instructions and what that really means there. So we have that. So let's go ahead and start with the total charity care tab. By the way, I want to mention that the total charity care tab and the total hospital bad debt tab are very similar for many of the columns until we start getting to the end. Patient payments, though, there's an important point I want to make with that. When we get there, there are going to be payments listed on, actually all 3 of these tabs have at least one column that talks about payments, but I want to make a point that they are different. The payments we're looking for in each of these tabs are different for different reasons. So I'll get to that point in just a second. But let's start off with the total charity care tab. Of course, you have some generic information at the top, provider number, fiscal year end, all of that. But then we start off with column A, asking whether the services were insured or uninsured. In other words, are they going to be on column 1 or column 2? Again, it's one big tab for this, but we do need to know which ones are insured or uninsured. Now, if you happen to separate these tabs into insured or uninsured, that's fine as well. But this works also. We can filter and sort by the insurance type. Primary and secondary payer plans. Now, obviously this would only be applied or applicable if it is indeed an insured patient. So otherwise you can just leave it blank, or if you want to put NA, whatever works there for you. But the reason this is important is that if there's a payer, we would likely expect there to be some sort of payment over in this column. Again, these are third-party payments. These are not patient payments. They'd be third-party payments. So there might be situations there. I mean, I suppose there could be situations where there's an insurance payment and for some reason nothing was covered. But keep in mind, if that's the case, if it's technically an insured patient but nothing's covered, then remember that still needs to be split into the insured column. So now I'm getting a message. People are not able to see the screen. Is anybody able to see the screen? It's sharing.
It's fine.
Yes, that's fine.
Yeah,
I
I see
can
it.
see it.
Okay, I'm not
You're
sure why
fine.
some people are having troubles there. We'll have to leave it at that. They might want to try to log back in. I'm not sure. But anyways, so the insurance status and then the primary and secondary payer plans. So then we get to the transaction code. Now this might be specific to your facility. It probably will be specific to your facility. It's what type of charity care write-off are you including? So what we're going to need here is a legend showing how you've written that charity care off or why you've written that charity care off. So that would be specific to your facility. We need to see a legend as to what these codes really mean. Of course, then we get to patient-specific information, some sort of identification number, patient name, birth date, social security number, gender, admit, and discharge. Now, some of these things, these are all CMS requirements. CMS built the listing, the initial listing that we were supposed to use. There have been questions on really whether all of these are absolutely necessary. At this point, we're starting off, we need these. We've been trying to work with CMS to kind of cut that listing down a little bit. Some of them are very obvious. We need some sort of identification number for a patient so we know who that patient even is. And of course, we need the admit and discharge date. If there's anything you're absolutely unable to provide, let us know and we can see what we can do for that particular case. But really, as a starting point, we do need this. Now, the service indicator, inpatient or outpatient, that really is just to tell us, basically it's used when we sample. Obviously, inpatient claims tend to be higher dollar than outpatient. I suppose not always, but that tends to be the case just by the nature of them. And that's really one of the main reasons for that service indicator, is just for us to be able to sample. Then we get to the date of write-off to charity care. Obviously, this is probably one of the most important pieces because we need to know whether that was in this period. So it doesn't matter when the service dates were, when the admit and discharge dates, we need to know the date of write-off. Now, that has to be in this cost reporting period. Even if the admit and discharge, even if the service dates were a couple of years ago, we need to know when it was actually written off in your financial accounting system to charity care. Now we start getting into some of the dollar amounts here. Oh, by the way, I do want to mention that whenever we see a date of write-off that's multiple years after the service dates, again, this doesn't necessarily mean it's not allowable, but it would be subject to a little bit more scrutiny. If this thing's 2 or 3 or 4 years ago, that might raise some questions. And the main question would be the concern, or the main issue would be the concern for duplicates, or the concern just that it's improper to begin with. Something might be mistaken for whatever reason. So that's just one thing to point out there. Obviously, if it's just a few months later, that's not a big concern, even if it happens to fall in the next year, but just keep that in mind. And of course, all of these things are subject to detailed testing at some point through samples. And the next item we have would be the revenue code. Now we're going to talk about notes 1 and 2 here. This is where the listing can get quite lengthy in some cases. If you have situations where your accounting system or your system and your information system, let's just generically say that, if it includes both professional fees as well as your actual hospital fees, then that's where we need to see these revenue codes split out so that we can be able to take a look at any individual claim and see were there any professional fees there that we need to carve out. So let's look at notes 1 and 2 back on the instruction tab. First of all, note 1. So it says if your hospital tracks professional fees and physician charges in a completely separate system from your hospital charges, and therefore if we wanted all that information, you would have to query it separately, then in that case, you do not actually have to provide the revenue code detail. And the reason for that is that you have kind of an almost unintentional or maybe intentional internal control system built in place that really eliminates the risk that these charges might be commingled. If they're in completely different systems, then there's, I don't want to say zero concern, but there's considerably less concern that this listing is going to include professional fees. Now, that goes back to the requirement that any professional fees have to be carved out. So if you keep it separately, then your system already carves it out. That's basically what we're saying here. That's note 1. Note 2, we're going to actually get to later, but it says the total charges in column O should generally equal the sums of P, Q, R, and S. So let's get there for a second. And actually, well, yeah, N and O kind of go together. N is the revenue code. O is the revenue code total charges for the claim. But what that was saying was that O, the total charges for a given claim, should generally equal patient payments, third-party payments, patient charity care approved amount, and then really other things like insurance write-offs, courtesy discounts, things that were not allowable. So if you have these charges, where do they go? What's the ultimate disposition of those charges? That's really what that's saying. Now, what it's also saying is that in no case can P, Q, R, and S exceed column O. You can't have more payments and charity care and all that other stuff than you do charges to begin with. But there could be a situation where O is greater than these 4. For example, you might have charges that there has not yet been a disposition. The insurance payment covered some of it. There might have been some written off to charity care. The patient may have paid some, but maybe they didn't pay their entire liability yet. So that extra amount just hasn't been disposed of yet. And that's fine. That might happen in another period. Maybe it'll be a bad debt in a later period. That's something different altogether. But we really want to make sure that P, Q, R, and S don't exceed column O. So again, N and O deal with the revenue codes and the revenue code total charges. Of course, if you have separate systems, this becomes a much easier listing. But if you do have a commingled system, we need to see the various revenue codes so that we can either gain assurance that there are no professional fees or, if necessary, carve them out to begin with. Now, that's another thing. If this listing is done properly and we're able to see the professional fees right off the bat, then we can exclude them before we get into the sampling of the detailed testing, all of that. Now, the other thing, though, is if you're making this attestation, because that's the key thing, you need to have this in your cover letter. That attestation needs to be in your cover letter. So if you're making that attestation, but then we sample a particular unit and we find professional fees, then that really invalidates that attestation, and that may cause a lot of extra rework. We might even have to go back and request a listing done properly to begin with. So just keep that in mind there. So let's move on to, we talked about column O, revenue code total charges. And then we have the total patient payments. So what I want to stress here, let's look at note 3. This first thing I want to mention is this is not what's going to be on line 22 of worksheet S10. Basically, this patient payment would be all patient payments for that claim, even those that had nothing to do with charity care. Because keep in mind, not every patient, and probably most of them, are not going to get a 100% charity care reduction. So if you have a patient that, let's say, was approved for, I don't know, 25%, they're responsible for the other 75%. So of course, we should hopefully at some point see that payment for the other 75%. That's not going to be on line 22 to offset your charity care, but it does need to be in this column P to help explain again where those charity care charges, how they were disposed of. So we have that, but let's look at note 3 here. The payments included in the total patient payments columns of both the total charity care and total hospital bad debt tabs again relate to all payments by the patient made against the entire claim. This is not the line 22 amount. So we have that. Third party payments would likely be insurance company payments. I suppose there could be other third parties there as well. And now keep in mind, if you have, well, I said this earlier, if you have an insured patient, then we generally would expect something here. If not, that calls into question whether it was covered to begin with and whether it should be reported in the uninsured column, split into the uninsured column. Column R is really the focus of this tab. This is your patient charity care approved amount. And by the way, I know the label doesn't say it, but this also includes uninsured discounts. So anything that you've approved as part of your charity care policy or your financial assistance policy, that's what goes in column R. And we are looking for the amount. This is the amount that ultimately will go on line 20, column 1 and column 2, depending on whether it was considered insured or uninsured. Now we have this column S, other contractual amounts. These are things that were not really payments of any sort. They were offsets to revenue, but not necessarily the offset to revenue that's allowed for charity care. So it could be an insurance write-off, a courtesy discount, anything that's not allowed for charity care. So if it's not part of your policy, then it would go in column S versus column R. Now, the other important thing I want to mention here, let's see, we have note 4. I want to go through that. Well, yeah, this just basically says what I just said. It's the line 20 amount, and it has to be as part of your financial assistance or charity care policy. Then we have column T. Now, that's that odd line 25 situation. I want to stress it because we've seen quite a few cases where it was done improperly. Anything on line 25, and in fact, let me open up HFS to show you what I mean. I know some people use other software. Well, actually not at this point. So line 25, anything in line 25 must also be included in the amount on line 20, specifically the line 20 column 2. So this should not be a separate number that's never been reported anywhere else. It has to be part of line 20 because this line 25 just explains to the system for calculation purposes how much of line 20 is really a charge figure that needs to be subject to the cost to charge ratio. So that's what line 25 is all about. And that's what this tab is all about, or this column. Any non-covered charges for days exceeding the length of stay limit for patients covered by Medicaid or other indigent care. There's a note 5 on that, but it really explains what I just said as well. So that's the key thing there. We have that for charity care. So I'm going to go to the questions now. Let's see. There are some states, California and Texas are 2 examples where hospitals are not allowed to bill professional fees. They have to be billed by the physicians themselves. So keep that in mind as well. Yeah, and if that's the case, then certainly they wouldn't be in your system at all. So I would just say if you were in that boat, just include that information in your cover letter, and then there wouldn't be a concern. So that'd be one other reason why we would never see a professional fee there. And there was a question about the last webinar. We discussed in the last webinar that we should not be including Medicare bad debt that is included on E-Part A for charity care, which makes sense, but would it be acceptable to include the Medicare co-payments as this is not included on E-Part A or B? So I think what you're saying is if you have an amount that was not included as a bad debt, a Medicare bad debt, for whatever reason it was not allowable, was not written off, it didn't meet the Medicare bad debt requirements. In that situation, then yes, you could, assuming it's within your policy, you could write that off as a Medicare charity care as well, or instead. The key thing is you can't write something off in both places. It can't be both a bad debt and a charity care. Now, the thing with indigent bad debts is where there's more potential for crossover, because just by the nature, you think of indigent as charity care. I know we've seen that term used quite a bit interchangeably, but there's just that very slight distinction when we're talking about it from a Medicare bad debt perspective. We use indigent bad debts. That's potentially allowable for Medicare bad debt reimbursement. Therefore, that same indigent claim would not be allowable for charity care, even though it might have used the same or similar policy, a quote unquote charity care type policy. It still can't be in both places. So yeah, so to answer your question, yes, that would be allowable there. Again, keep in mind, anytime you have Medicare, that does raise the level of scrutiny just a little bit because there's that potential for duplicates. But again, it doesn't mean it's not allowable. It just means that we need to get some assurance that this was not also reported as a bad debt. And there's a question about, can we make the suggestion that the revenue code detail be included in a separate tab to reduce the number of lines in the respective listings? And yeah, that's actually an option. We've seen that before as well. Let's see where, let me mute my stuff here. We've seen that where people have included their main listing here, but then they've also had a separate listing for the revenue code detail. And that's certainly fine to do that. If you want to have one listing showing just each individual claim and showing all the detail here, and then just having the second listing, maybe a second version of this tab, showing the breakdown of those charges by revenue code, that would be allowable as well. Again, the key thing with the revenue code breakdown is we're trying to get some assurance that there are no professional fees included. So that's what we have there. The definition of insured and uninsured in column 1. So if a patient possesses Medicare coverage, for example, Medicare will not cover certain charges, and those charges are applied to charity, is that insured or uninsured? So that's a good question. If you go back to the column 1. So this really, what this should do is link to where you've reported it on worksheet S-10, line 20 specifically, but whether it's in column 1 or column 2. And for that reason, in your situation where certain charges were not covered by Medicare, that non-covered, or well, if we say it probably wouldn't be Medicare, it'd most likely be Medicaid or maybe an insurance company. But if they didn't cover that portion of that claim, then that's another situation where you'd have a claim that was split into two. So not only would you have a claim split into two because of revenue code, you'd also potentially have a claim split into two because part of it was covered, part of it was non-covered. Remember, we talked last time about how those types of claims will be split across two columns. Out of that claim, let's say half of it is covered. So half of that claim is going to have coinsurance and deductible related to it. The other half of the claim is uninsured and it's going to have charges related to it instead. So the only real clean way to do that is to have that one claim split across two rows. Half of it would be insured. I'm just saying half generically. Part of it would be insured, part of it would be uninsured. So to directly answer your question, yes, that would be uninsured where that portion of the claim is not covered. Let's see here, we have, what would be the correct way to report charity care write-off from the hospital, or if the hospital does bill the professional fees, patient is given a self-pay discount of 80% of total charges. Do we take the write-off and split it among pro fees or take it all against the hospital charges? So in that situation, I guess if it's just a flat 80% self-pay discount across the board, then, I mean, if it's truly 80%, there's no distinction between the two sides of the claim, then it really would be proper to have 80% of both pieces reduced. So you don't necessarily need to take it against all the hospital charges. But if there's some sort of question about how would that have been split out? Again, if you have a distinction between how you handle your self-pay discounts, I can't imagine you would. I don't know that makes sense. You treat the whole claim the same way and either give them the discount or not give them the discount. So to answer your question, yeah, 80% would be split out amongst all of the fees, the ones that are allowable for charity care and the ones that are not. So good question there, though. Okay, so let's go ahead and move on to the next tab, which is patient payments themselves. Now, again, just by the nature of patient payments and what that line 22 is really looking for under the current cost reporting instructions, that's not generally expected to be a very large number, because what this is, if we open up column or line 22, these are patient payments or payments received from patients for amounts previously written off as charity care. And by the way, when they say previously, they're not just talking about a month or so in this same year. They're talking about in a prior year. So it was written off to charity care in a prior year, and now all of a sudden the patient came back and said, hey, I know I was approved for charity care, but I'm still going to pay that claim off. That's what we're looking for in line 22. That is different than what was being asked for cost report periods beginning prior to 10-116. But now for the past couple of years, we've been on the new instructions, and it's just payments where the patient came back and they wanted to clear their charity care, so to speak. They wanted to pay that off. Again, that's not payments that patient made for other parts of their claim. It's just the amount they've paid against a charity care write-off that was in a past year. So for that reason, there's generally not going to be that much of a payment to worry about. But when there is, we need to certainly see it because it does offset the charity care. It's a reduction factor. And obviously, if you did make a payment, and by the way, I want to stress this as well. If you collected this payment, you kept the payment, you didn't return it back to the patient. I know some hospitals have policies where they just reverse that payment. They send it right back to the patient for whatever reason. In those cases, so let me back up. I'll probably confuse that issue. So if you did return the payment, then the payment doesn't exist to begin with. So of course it's not going to be reported. But if you kept the payment and if you did not reverse the charity care, I've also seen some hospitals where as soon as they get a payment, they reverse the original charity care entry. So that'll show up as a negative charity care this year. If that's the situation, that's going to already reduce charity care directly. So the payment would already be offset. So what this line or what this set of lines is intended to handle is where you left the charity care entry as it was, even though it was written off in a prior year, you didn't touch the charity care entry, but you did have a payment coming through and you kept it. That's what that line 22 is all about, and that's what this tab is all about. So much of the data is going to be the same as far as the identification, but notice there's this column D where it just is a payment transaction code. Again, that's going to be internal to your systems. What type of payment did you accept? And then we get over to M, the date of collection. The payment had to have been received this period, otherwise it's not going to be reported here. N, the amount of cash collected this period related to a charity care write-off from the prior period. So this is the dollar amount, and this is what's ultimately going to go on line 22. And it says see note 6. So if we take a look at that, the patient charity care amount in column Q, oh, that's note 7. The patient payment amounts written off in the patient payment tab relate to actual patient payments made during this cost reporting period that relate to amounts previously written off to charity care in a prior period. And then, as I said earlier, this should not include patient payments that were against non-charity care amounts. If they already owed 75%, then of course their payment against that 75%, that's a valid payment. That's not included in line 22 because the original amount would not have been included in line 20 either. So there's nothing to offset there. Now we're getting into the other columns that help to explain whether or not this amount is valid or even needs to be reported. Column O relates to the total hospital charges for the services provided. Column P is the total physician or professional charges for the services provided. We want to know the date of the original write-off for this charity care in prior years. So if you're receiving a payment and it had to be related to a prior year charity care, we just want to know the date or even the year, just something to give us some assurance that yes, this definitely was related to a prior year charity care. And then what cost report period did you claim that charity care? Just again, to give us assurance that we're not over-reporting payments. Column S, what was the patient liability on the claim? That gives us something to go off of to determine, well, hey, should some of this payment really be related to patient liability? And then column T, bad debt amounts written off on the claim. Because the other thing about this is if there's a bad debt, if there's any bad debt for that claim, then it would actually make much more sense for this payment to be a recovery of bad debt first. That's the first treatment of it. It should recover bad debts. And then if there's any left, it goes against charity care. So that's what we have there. And then let's see. I'm going to go through the last tab and then we'll move over to the questions again. So most of the total hospital bad debt is identical. The first column A through K, they're the same thing, identifying the claim, the type of insurance status. But then we get to column L. Now it's the date of write-off to bad debt instead of charity care. So we have bad debt. Then the next few columns are pretty much the same, revenue code, and all of that showing the disposition of the charges again. So really the main difference there is that it's now a date of write-off to bad debt instead of charity care. And then at the very end, we have column S, which is the patient bad debt write-off amount. So that's just one more disposition for these charges. They paid some, third party paid some, maybe some was approved for charity care, insurance write-offs and all the other stuff, but then there might be a residual amount for bad debt. This is, of course, what we're looking for line 26. Going back to the HFS here, we have line 26, total bad debt expense for the hospital complex. And I want to make a very valid or very strong point that that expense verbiage is actually not correct. It's write-offs. Now, under GAAP, expense is a different term than write-off. Under GAAP, generally accepted accounting principles, on your financial statements, bad debt expense is reported, but write-offs are actually not found on your financial statements anywhere. And we talked about that last time, how that's a derived number. We have to back into that bad debt write-off. So that's the point to make there. But ultimately, this column is the dollar amount of patient bad debt write-offs that should tie to column 26. Let's see, note 7. Yeah, let me go back to note 7. I think we missed that. And that is an important one too. So the bad debt tab, we have some charity care approved amount, but it's not necessarily going to be the same as the charity care approved amount from the total charity care tab. It's all about the timing of it. So note 7 says the patient charity care amount in column Q of the bad debt tab should reflect all charity care ever approved for the claim, even if it was in a prior period, because we want to know the ultimate disposition of that entire claim before it finally got to a bad debt status. So you might have approved 50% for charity care, you expected payment on the other 50%, and you waited 120 days or maybe several months after that, and they still didn't pay, so you might decide to write that off as a bad debt. That's what this is reporting. So that note is very important there as well. So let's take a look at some of the questions we have here. Let's see, similar to charity care write-off at 80% for a patient with both pro and non-pro charges. How are patient payments considered? Are they split based on the charges? Actually, did I already cover that one? Oh, no, it's similar to the other one. Yeah, it'd be the same thing unless that patient specified what they were paying. If they specified they were paying just for the hospital services and not the professional charges, then that'd be a different situation there. But if there's no way to otherwise separate that, it would only make sense to separate it based on the charges there. So that'd be a good question there. The next question, CMS permits patients with coverage from an entity that does not have a contractual relationship with the provider who meet the hospital's policy. Can we clarify if auto, workman's comp, and other commercial non-par plans are allowed as charity if the patient meets the financial assistance policy? So again, the key thing there is that it has to be in your policy. So if you've specified it, of course, they wouldn't generally have a contractual relationship with them, but if it's in your financial assistance policy, then yeah, it could be allowable. That's the key thing, though. It has to be specified. And let's see, we get to the next one. Any charges that were approved for charity care related to non-covered services must be reported in line 20, column 1. So it's uninsured and gets subject to the cost charge ratio. Yeah, go ahead.
Yeah, that was just me, Ron, answering one of the questions up above.
Oh, okay.
They asked again about the definition of insured and uninsured in column 1, and
sure.
mentioned a Medicare patient. So I was just answering that one.
Yep, you're correct there. Thank you very much. And let's see, is it acceptable to give a separate listing of transaction code and write-off similar to what we discussed with the separate listing of revenue codes? So that one, it might, well, yeah, if there are multiple write-offs, that's a good point. You're going to have different dates and everything. The only tricky part there is when you have different transactions for the same claim. Now, all of a sudden, we're going to have all this information. Let's go back to the charity care. All this information right here that will no longer really be one total charge figure. And for that matter, one patient, it'll be split amongst the transaction codes. But if you're talking about giving a separate listing, the first listing would just have one claim and maybe it would say see second listing for more detail. That would probably be the cleanest way to do it, because then we'd have one claim's worth of data in each line. And then for our testing purposes, we could go to the second tab and make sure the transactions made sense. So certainly that would be clean. We would definitely allow that. No problem there. And let's see, to clarify if bad debt write-off code or charity care write-off are reversed with payment and captured in current year, as it is code activity in current year, it would not appear on patient payment tabs. So let me see if I understand that. If they're reversed with payment, good point, good question. So you're right. If the payment came in and based on your internal policies, you go back and instead of just treating that as a normal payment, if you go back and actually reverse the original charity care write-off in that situation, then you're right. The negative is already coming through on the charity care listing or the bad debt listing. So it would actually be a double negative if we tried to also include a payment reduction. So you're correct. In that situation, it wouldn't be included in the patient payment tab, although it would be a negative amount on the total charity care tab. And that in and of itself might raise some questions, but it's a valid situation. By the way, in most cases, we have to separately sample the negative amounts just due to the system we use. So again, we might just ask questions about those. We might treat them as one separate stratum, ask questions, and if there are no major concerns, we'd be done with that piece. So good question there. And yes, there's a very good question. The date of write-off to bad debt. We assume this is the date written off to the financial statements, even if it's not back from the collection agency. And you're absolutely correct there. That's the one odd thing, the one difference between Medicare bad debt and total bad debt. Here on line 26, we're looking for total bad debts, and they should match the total bad debts written off that ultimately made it to your financial statements. Now, again, I'm using that language intentionally. It's not a number that's explicitly reported on your financial statements, but if we were to look into your accounts and again, if we were to track the write-offs, if you were able to pull a report of actual write-offs that period, regardless of whether they were returned from the collection agency, regardless of whether they met the requirements for Medicare bad debt, which does include returning from the collection agency. So regardless of all of that, if you actually wrote it off in your financial systems, financial accounting systems, then it does get included in this total hospital bad debt. Now, if it's a Medicare patient, then the point I was trying to make in the last webinar is that maybe in the next year, this thing's going to be written off for Medicare. You obviously can't write it off again on line 26, but it would be written off for Medicare. And the way the system works, and I'm just going to open this up here, the way the math or the formulas for line 26 through 28 work is that you report line 26, and then it pulls over the amounts from your E Part A, E Part B, your Medicare bad debts, and it figures out how much of that or how much of your line 26 was actually Medicare that's already been reimbursed, and it carves that out because it's not going to give you that a second time, but it does give you the portion of Medicare that has not been reimbursed, the other 35% that's never allowed for Medicare. That's the point. That's the portion it pulls in. So the way the math works over a 2-year period, let's say, it will handle it properly. If you have a particular claim as total bad debt in 1 year, but not Medicare, and then in the later year, that same amount comes through Medicare, but not total bad debt, it will wash out. So we have that. And yeah, so your answer is correct. It's the date written off for financial accounting system purposes. I'm going to use that verbiage, not Medicare. And do you include all bad debt write-offs in the template, including bad debt that's not included on S10? So you're correct. In this tab, we do not want to include insurance company bad debt. This should just be actual patient bad debt. So this amount should tie to what's on line 26, and it should not include insurance companies or anything like that. And can the financial assistance policy refer to the procedure our organization uses rather than having to include the myriad of variations that might occur in the financial assistance policy itself? Let's see, refer to the procedure the organization uses. Well, so I think I see what you're saying there. The problem is when we're doing the audit, we actually need to see that written down somewhere. So if you're saying that you have more of a procedure or process or practice, I should say, as opposed to a formal written policy, that would be a bit of a concern. We do need to see it written somewhere in the cost reporting instructions, and I can even say this is in our audit program. It's very explicit that we need to see things in the written policy. So if you have them documented, I will mention that one time last year, we had a situation where a provider was using a policy, but it wasn't really labeled anything near charity care or financial assistance policy. And we asked the question of, hey, is this still all right? We asked CMS this question, and the response was that no, it should be documented clearly as either a financial assistance policy or a charity care policy. So I think the answer to your question would be that would not, unfortunately, be allowed. It would need to be wrapped up somehow in that financial assistance policy, using your example. And I will say that response kind of surprised us, but CMS made it pretty clear there. Yep, go ahead.
Yeah, you mentioned last time too that you sent that letter out talking about the importance of financial assistance policy language. And I think that's a copy of which someone requested last time. So we'll be sending that out after this session, which might help clarify in people's minds the level of detail that is expected for certain categories in the charity care policies.
Yep, no, I'd agree there. And I think when we put that letter together, that was really the response or that was gathered based on responses from CMS, based on things we were seeing from provider policies that we looked at. So that's why we sent that reminder letter out, was just to kind of wrap all that up, just making sure everybody was aware of it. So good point there. And then let's see, what about charity and self-pay, 2 different policies. So the self-pay is addressed in a separate policy from charity care. So would that be self-pay being uninsured discount, I assume is what you're talking about. So would it be under your financial assistance policy at all? What I would suggest is you would, at the very minimum, want to reference the fact that there's another policy. I think self-pay was why we had to send that question off to CMS, because it was in some completely separate policy that wasn't even closely related to financial assistance or charity care. And I believe that was the subject of that question we sent to CMS, and they wanted to see it in a charity care or a financial assistance policy. So I would suggest if that's not currently how you're handling it, you should probably at least add some sort of reference to that going forward. Of course, any changes would be prospective, but just to cover yourself a little bit. Another good question. We made changes to our policy based on the 2018 audit. Obviously, those changes were made in 2020 going forward. Will those changes be taken into account in the 2019 audit? So the policy is technically prospective if you made the change. What we're going to be looking at is how, if you've specifically disallowed something in your policy, and even if you reversed it in a prospective charity care policy, that won't do anything for this current year's audit. If you've specifically said we do not allow this, we cannot allow that in that situation. The gray area comes in when it's more vague language. It's not explicit enough. That's where there's a little bit more of a gray area, and we can work with you in that situation. But if it's explicitly not allowed in your policy, then we won't be able to reverse it until your policy has been fixed, and that would be in a later year when we'd be able to do that. So hopefully that helps to clarify that question. And then now that we've gone through the different tabs, I think what I wanted to do was look at the charity care, or I'm sorry, the query logic questionnaire. By the way, that terminology, that's just terminology that CMS gave us. Again, we can't disclose the entire audit program, but there are bits and pieces that are just generic enough that we can mention. Query logic was one of the terms they used, and that's the reason we use that as well. But what I want to stress here is that query logic is not trying to reference, and I think Ron touched on this last time, it's not referencing something from your computer system or something that your database managers or administrators would provide. It's not computer logic, basically. It's just a narrative. But this questionnaire is intended to make it a little bit easier for you to respond to these types of things rather than having to go through and recreate a narrative. So we have some questions on charity care, payments, bad debts, and some other items. A lot of these are just making sure they were in the right period. So just questions like this: how did you make sure it was written off in this period, regardless of when the service dates were? How did you ensure there was no duplicates for charity care written off in 1 year, in multiple years, basically? Again, one claim can be split, but the entire amount can't be written off twice. So that's pretty self-explanatory there. Number 3 is the legend for those transaction codes that we talked about. This might be a separate list that you give us. That's fine. What methods are used to ensure there are no claims reported in both the charity care listing and the bad debt listing? Now, again, your response may say there are some claims that are half reported in bad debt, half reported in charity care. That's fine. We just want to make sure you have some sort of internal control when you're developing this listing to make sure you didn't accidentally grab the exact same full claim and put it in the full amount in both listings. So we just need some assurance that you were able to do that in your system. Number 5, do you have any Medicare patients? Again, that doesn't necessarily mean they're not allowed as charity care, but it's a higher level of scrutiny because most of the time we would expect that providers would get more benefit, more reimbursement out of writing it off for bad debt. Even though it's only 65 cents on the dollar, That's still generally better than what you're going to get from the charity care side as it filters down to the uncompensated care payment. So if you did write off a Medicare claim as charity care, one of the valid reasons might be it was not eligible for Medicare bad debt reimbursement for whatever reason. You just didn't meet the collection effort, you didn't timely bill, or whatever the situation is. We want to know some sort of explanation for that. Number 6, if you have exhausted benefits, and again, what that basically means is part of the claim is not going to be covered. You've exceeded some sort of limit, then we want to know how you ensured that the coinsurance and deductible related to the covered portion of the claim is included in column 2, insured, while the charges for the claim, only the portion related to the non-covered portion of the stay, the exhausted benefits, those are reported in column 1 as insured. So first of all, we want to know, does your policy allow this? And second of all, how did you split it? Because that's another key thing where CMS requires that any reference to non-covered portions of claims, for it to be allowable, it has to be in your charity care policy. So that's what number 6 is all about. Number 7 is very similar, only it's non-covered services. It's not so much a time limit or a dollar limit. It's just that this particular service is not allowed at all under that insurance company, but the rest of the claim was. So the same thing, how did you split it? Does your policy allow it? And how did you split it? Number 8, this one is the contractual relationship issue that we just talked about a bit ago. Does your policy allow it? And if so, how did you ensure that the charges related to those services are reported as uninsured? Because keep in mind, if there's not a contractual relationship, then it's not technically considered an insured patient. Is there a particular code that is used to identify those? Number 9, this is where we get into that specific situation with the Medicaid stay that exceeded the length of stay limit, sometimes referred to as a capitation plan. Now, it's very similar to these other situations about exhausted benefits, but for some reason that we've never been able to get a response on, CMS treats this as a completely separate thing than all those other exhausted benefit situations. That's why they created line 25 at the very beginning. So we want to make sure, again, your policy allows it. And how did you make sure that those charges were only for the days after the length of stay limit, and that they're both included in line 20, column 2, and that portion of the amount is also in line 25. So as you can see, when you're going through this checklist, it's intended to also serve as kind of a training or a reminder about some of these obscure issues. Number 10, have you included any amount related to self-pay discount for insured patients? If so, explain what section of your policy explicitly allows this. We talked about that. How did you ensure no physician or professional services were included in the charity care listing? What revenue codes did you filter out? Or did you have a separate system altogether? That would be an answer for 11. Number 12, on the total charity care tab, the total charge column should equal the sum of total payments, third-party payments. And we talked about that, how those columns must equal total charges or at least not exceed that. And that's the last sentence is getting at, are there any instances where this is not the case? And if so, please explain. So you may very well have a number of claims where they just haven't been fully handled. The patient hasn't paid their entire amount, but it's not written off as a bad debt yet. So that would be a good answer for 12. Really, 12 is just more of a reminder than anything. Hey, make sure to look at your listing and make sure there's nothing odd with it. Column 13, how did you ensure that S10 line 20 column 2 for the insured only contains deductibles, coinsurance, and copay amounts related to insured patients and not any charge for other amounts for those patients? But we do give the exception about the Medicaid program exceeding the length of stay limit. That is currently the only exception where column 2 is not just going to be a deductible, coinsurance, and copay amount, part of that will be charges, but just for those special Medicaid length of stay limits. And then again, that amount is also in line 25. All of the other claims for exhausted benefits, non-covered services, those need to be split so that charges would never show up in the insured column too. Remember, I referenced the fact that CMS is changing, or they're proposing to change the instructions going forward from 20 and on. It's not final yet, but they're going to add a separate line in there, which will basically mean that insured column is used for even those non-covered services. It'll include that deductible and coinsurance. We hope they get away from that. We've proposed that they get away from that altogether, but right now, this is what we have. Number 14, do you employ the use of presumptive eligibility tools to determine charity care qualification? If so, what section of your policy explicitly covers this? So I do want to stress this. Presumptive eligibility has never been allowed for indigent bad debts, Medicare bad debts, but it is allowed for charity care on line 20 as long as your policy covers it. That's a distinction that CMS has made. They've stressed for years and years that presumptive eligibility is not allowed for indigent bad debts, though. This does not change that. We get to line 15. How did you ensure that the patient payments reported on line 22 are only those related to charity care written off in a prior period? And there's a reminder about what that really means. Number 16, is your policy discuss the treatment of patient payments that were sent in for an amount that the patient is no longer liable for because it was written off for charity care? So that really is the situation that's going to show up on line 22. The patient had an amount written off for charity care. They're no longer liable for it, but they still paid it. So we want to know, are those amounts returned to the patient, in which case there's nothing left to report, or are they used to reverse the original charity care entry, which, as we said earlier, that means that the charity care is already going to have a negative included in it, and therefore there's no reason to put the payment as well. But of course, the third alternative is that you left the charity care and you still reported a payment. That's where line 22 comes into play. So 16 just tries to walk through that. When we get to 17, again, it's how did you ensure you included it when it was written off, regardless of the service dates. 18, are there Medicare bad debts reported on line 26 that are claimed in a different cost reporting period for Medicare bad debt reimbursement purposes? E Part A, E Part B. That's the collection agency situation we talked about earlier. They're on line 26, but they have not been claimed in this same cost reporting period for Medicare bad debt. Now, maybe you already know they've been claimed in the next year, or maybe it still hasn't been returned from the collection agency even as of today, and that's fine. We just want to know, does this situation exist? Not a big deal if it does or does not. We just want to know if it does. And really, this was more to let you know that, yes, it could happen. 19, how did you ensure there were no bad debts duplicated in multiple years? 20, what transaction codes identify bad debt write-offs versus other contractual adjustments? Again, a legend, more or less. And line 21 is the example of that reconciliation. So this is what I've talked about a few times. Explain how the total bad debts reported in line 26 reconciled to the write-offs derived from accounts receivable balances on your financial statement or working trial balance. This is just a basic example of how this reconciliation could look, but you can come up with other reconciliations. There are multiple ways mathematically to do this. So just use this as an example. And then just a couple of overall questions. Line 22, if the listings that you are providing do not correspond to the amounts you originally reported on the various lines of S10, please provide an explanation as to why the amounts have changed. Did you amend something and you didn't get a chance to amend the cost report earlier, or what happened? And then number 23 is just a catch-all. Are there any other explanations you think may be helpful to the auditor reviewing the listings? So 23 questions, but again, we hope it'll serve certainly if it's your first time or even second time, that's kind of a training tool to make sure you catch certain things before you send them in. The cleaner the listing is when it comes in, the less likely it is for us to have to extrapolate some sort of error that could have otherwise been carved out on its own to get a more accurate number. So let's see here. We have a couple questions here. Where can we obtain a copy of this S10 spreadsheet with the notes? So I think in the PowerPoints, I had a link to our website that has this, but I'm also going to include this in the email that goes out as well. And I'll include the link to it so you can get it from both places. If something changes, you'll know where to go to find it. Let's see, what is the requirement? Oh, yeah. Also, the Excel spreadsheets for Medicare DISH and Medicare bad debt. So that same link, or it's actually on our website, I'll send you a link for that as well. The requirements, the forms themselves are optional even at this point. CMS has been working on a work group to send them through to get them approved for mandated use, but right now they're just optional. Now, it is required that you have some sort of support for your numbers for DISH and bad debt from 10/1/18 fiscal year begins and on, but there's no mandated template that has to be used. We've just put the proposed version out there. And let's see, in our internal review, we found that a few accounts were written off in excess of charged errors or charges in error. Can we report the appropriate charity care amount and have the correction posted in the current year? Let's see. We're written off in excess of so a few accounts were written off in 1 year, and it was more write-off than should have been reported. Can we report the appropriate charity care amount and have the correction posted in the current year? Yeah, if you make an adjustment in your financial accounting systems to charity care, and it's kind of a revised write-off in this current year, or in the year under review, I should say, then yes, that would be in this listing as well. The column's exactly the same as last year. So I believe the only difference we made, I think in the charity care log, I think the write-off date was kind of in the middle of one of these numeric amounts, and I think I reversed it. But other than that, everything's the same, except the labels are a little bit different. They're more descriptive. Now, it depends on when you grabbed it last year. We updated it midway through the audits last year just to make those two minor changes and the labels and everything. But other than that, it's the same. Will you provide some guidance as to whether we will need a financial assistance policy as well as a charity care policy? Was not quite following, but I think I understood we would need two policies. So you could technically have it in one policy. CMS uses the verbiage separately. They use the FAP and then the charity care policy because some providers have had that in two different places, but there's not an absolute requirement for it to be in two places. Yep. So, and then can I repeat that answer? If I have a patient that received an uninsured adjustment in 2019, and then I find out in 2020 that they have insurance and reverse the uninsured amount in 2020, then my understanding is you would report the positive charity adjustment in 2019 and then the negative charity reversal in 2020. So actually, yes, 2019, they received the adjustment. So yes, it would be positive in that year, and the negative amount would go in 2020. You're exactly right. So it's all about when it hits your financial accounting systems, which there might be multiple hits offsetting one another in multiple years, just depending on what happens. Partial reversals, full reversals, and we understand that could happen. Okay, so what I wanted to do now is, let's see here. I'm going to go back to the PowerPoint slide just for a second to kind of catch where we were. Talked about bad debts, the templates. I do want to just briefly go through this secure EDI. So I think a lot of you have had a chance to look at this already. Hopefully the auditors have already sent you out what we call the initiation email. The way this system works is that even if, for example, if I was to set you up with an account, which all we have to do is send an email through the system to you, and that sets your account up. We give you the password. But the one unfortunate part about the system is that it's individual to whoever has sent you an email. So if I send you an email, you can only send stuff back to me. But if you want to send something to that other auditor, they also have to send you an email. They don't have to reset your password or anything like that, but they have to initiate conversation, so to speak. It's an unfortunate security part that's built in. We've asked if it could be changed, and unfortunately, that's just the way it's set up. At least at this point, maybe something will happen in the future. But again, it's as simple as asking your auditor, "Hey, could you send me the initiation email?" And then you basically add to your address book that way. So if you had 10 auditors send you initiation emails, you could at any point contact any of those 10 auditors. So that's the piece with that. They'll send you the email with the initial password. Here is the link to the Secure EDI website. But if you get that initiation email, it'll also include that link, the direct link to your account. There are instructions available on the website, and I'll include that link in the email as well. The good news is, compared to our system we had last year, the size limit is much larger. It's now 2 gigabytes as opposed to, I think, 15 megabytes, if I remember right, was the limit. It was extremely small last year. There are no file type restrictions. It keeps the name of the file, except for some reason PDF files, it gives us a generic name, but every other file type, Excel, fortunately, it saves the original file name. If you feel the need to leave passwords on the files, you can, but it's a secure system, so it doesn't need to have a password. And the other beneficial thing is that consulting firms can use this as well, or if you have a home office staff, they can use this tool. In the past, it was really supposed to be just providers. You had to have access to an NPI number and all of that, but now you don't. You can zip files up if you want to, and when we get the zip file, we can extract it. It's just easier to attach one zip file than multiple files, but it's completely up to you. So that's what we have for the Secure EDI piece. A few special points I wanted to get at before we get back to some questions. I'm just going to leave it in this view, easier to kind of maneuver through. Amended cost reports. This is a big topic that's come up a few times. Amended cost reports for anything, well, amended cost reports are not allowable for that year after the S10 audit process begins. If there are S10 related changes, like line 20, line 26, whatever, you can just work with the S10 auditor to incorporate those revisions. But we, of course, prefer that be as early as possible in the process because they're going to be starting their sampling. And if the listing changes after they've already selected that sample, all of that has to be reworked. So we want that to be early on. After the S10 audit is complete, there are not going to be any direct S10 adjustments allowable at all. So anything that would impact, well, anything to line 20, 22, 26, those would not be allowable after the S10 audit because we have to lock this data down. CMS uses it. They have a process they go through to analyze it. And there's also, we have the need to make sure we've given them the right data and nothing has come up and changed it later. But the other important thing to note is that nothing else that indirectly impacts line 30, S10 line 30 will be allowed after the S10 audit. Now that means you can't amend for Medicare bad debts because even though that doesn't impact line 26, it does come through and impact line 30, which is what CMS ultimately uses. And the much broader thing would be anything impacting any sort of cost or any sort of charge, or for that matter, adjustments or reclasses, because that'll change your cost to charge ratio. So no indirect line 30 adjustments would be allowed. None of those would be allowed, at least until the S10 audit is over, and at that point you can incorporate those items into the cost report final settlement. Like if you have a revised bad debt listing, you could submit that for inclusion in the cost report final settlement. So that's what I have italicized here. The next time CMS expects line 30 to change is when we have another formal review, either a wage index review, which impacts a lot of cost to charge items, or if there's a cost report final settlement that could impact bad debts, cost amounts, whatever. Now, the one thing that's not excluded is your DISH, your Medicaid days. If you have a Medicaid day revision, that could still be submitted as an amended cost report. And in fact, we're required by regulation to accept one listing up to a year after the original acceptance, which in many cases goes beyond our S10 audits, or at least midway through the S10 audits. So in that situation, we can allow the DISH Medicaid day revisions, a formal amendment for that, because those don't impact line 30. That's the key thing there. Anything that impacts line 30 will have to be rejected. Now let's see a couple of special points on some of these we've already gone through. The duplications of claims on listings. You might have the same claim showing up in multiple listings. If it's part of the claim was written off one year, part written off the next year, that part's fine. I wanted to also mention sampling. I've talked about it a little bit before, but we do use statistically valid samples. CMS requires statistically valid samples, at least for part of our review. And when we select the initial sample, we look at the required sample size, and generally we will select a few spares, and we're talking probably less than five or less spares generally. This is to save everybody time. It's to save you time having to go back through a multiple request and go back into your system to grab the other 5. But that doesn't mean that we might not need additional samples later, because what we do when we sample is that we do our testing of the initial sample and we appraise it, or we validate that sample after the audit adjustments are extrapolated. And we have to do another test to make sure it continues to be statistically valid. Now, if all of a sudden it says we need a larger sample size, now that these adjustments have changed the variability of that listing, so to speak, then we may require additional samples. We'll have to go back to you for that. Of course, the better we can clean the listing up front, the less likelihood we're going to have to extrapolate some more pervasive error. But the thing is, once we do the listing, once we select the sample, we won't be able to have another listing to fix those errors. That's why it's so important, and so much time is spent up front to try to get that listing as clean as possible. Again, that's one of the main reasons for that query logic questionnaire to begin with. And I think last time we had a question on whether we look at that up front, and the answer is absolutely yes. We do spend a lot of time in the analysis phase before we even get to sample selection. So, because that saves everybody time if we can clean the listing up front. I just included these 3 slides in case we had any remaining topics for charity care, bad debt, or payments, but I think we've covered those pretty heavily already, unless we have some questions that'll pop up in a bit. And the last thing before we get to open it up again for questions would be just the available resources. We have on our website, we have a link to the S10 article. In fact, we have time, so I'm going to show you where that is here. Oops, if I can type it in properly. If you search in our search bar for S10, that should take you right there. But if you want to browse to it or drill down, if you go to the Topic Center, of course, we're under Cost Report Audit. And if you go under S10 down at the bottom, or Worksheet S10 Uncompensated Care, we have that information about the charity care policy, but we also have the S10 charity care audits. That's where you're going to find, first of all, the Federal Register reference to this, kind of an overview, just a brief discussion of the cost reporting lines that apply, What years will everything be used for? Again, for the later years, it's prediction. We don't know for sure. Here's our YouTube video. And the templates are down here under the initial S10 requests. Here is the template, the spreadsheet, and here's a second YouTube video going through that template. The first YouTube video was just an overview of the cost reporting instructions. The second one was more for template specific issues, really what we just went through. And then just a summary of information that may be requested there. So let's see what else I had there. The templates, the YouTube channel, so all of that. And of course, we're going to have another YouTube video with this combined webinar included. So in the email that I'm sending out, just to recap, I'm going to send the PowerPoint again, just in case anybody missed it. I'll send a copy of that charity care letter. I'll make sure all of these links are included. The initial request letter, just a template of it. I know we may not be talking to the same people that received the initial request, so I'll include a copy of that so you have an idea. And the query logic questionnaire is in the template, so I'll include the template spreadsheet also. So let's see here. That's all I had for the slideshow. So let me go back to the questions, see where we are, where we left off. And the next question, can we amend for Medicare bad debt after the S10 audit? So you won't be able to amend for it formally. You won't be able to submit an amended cost report, but you can work with your final settlement auditor to get that data incorporated that way. So the key thing is in our checklist, we make sure to check in our amended cost report acceptability checklist, we're checking to see if line 30 has changed at all. And if it has, we have to reject that. Any changes have to go through the next formal review, which would be a final settlement at that point. So again, you can send in the amended listing, but not the full amended cost report. So at this point, we left about, looks like 11 minutes. So are there any other questions that anybody else has? So is that amended issue a WPS thing or CMS? So it actually should be all max. We talked about this with all max. We had one of our conferences, all max and CMS were there, and there was agreement with this policy because of the fact, the major concern that different versions or different iterations of that file would go through at different times, right in the middle when CMS is trying to look at that S10 data. So that's the main reason for it. It did cause issues in prior years, I can say that, and CMS had to spend a lot of extra time trying to figure out what happened. So to avoid that issue, they've put this requirement in place, and all Macs agreed to it at that point. So I'd be very surprised if you saw another Mac that was allowing that. That would be different than what they have they've been told during that meeting. So. Any other questions or anything else, anybody on the call? I don't know if Ron, if you had any things you wanted to bring up that I might have missed or anything else to add.
Hey, Chris.
Yep.
Yeah, just a couple of things. I think Shirley had a question about the PDF files. Will they retain the same name as zipped? Because, you know, usually when they're providers are submitting some of that sample support, if they don't keep the same name, it's hard to kind of keep the the material separated for the auditor.
Oh yeah, good question. So when I said that, I think what happens is when it shows up on the portal, we can see the file name, but when we open it, do a file save as, for whatever reason, it saves it as kind of a default, a really lengthy, crazy name. But the good news is we can at least see what that name was, so we can then copy and paste it into the save as. But it looks like I had a response. There must have been a change with Secure EDI very recently, and now it's saving with the file name. So that little glitch has been fixed. It wasn't a huge glitch before; it was just an extra step we'd have to take. But apparently now it's not an issue anymore. So thanks, Jessica, for bringing that up. I'm glad to hear that.
And Chris, I just had one other thing that it related to bad debts, only because it didn't come up in some of the questions, and that has to do with crossovers. Written off to a contractual versus expense. And so last year, if you recall, the proposed rule specifically, stated effective for cost reports beginning on or after October 1st, 2020. But then the final rule, the way that read, was for cost reports beginning before October 1st, 2020. Medicare bad debts must not be written off to a contractual allowance, but charged to an expense account. But in the comments to or response to the comments in the final rule, CMS specifically referenced that April 4th, 2019 MedLearn article, stating that served as notification to providers and provided flexibility by allowing providers to report contractual allowance amounts as a bad debt as long as the other 413.89 requirements are met. But that was for cost reports beginning before 10/1/19. So I think there was a little confusion because, like a lot of what was codified, they were saying, this has always been our policy. And so it sounds like it's, even for cost reports beginning before October 1st, 2020. But the fact that they included that that mention of that article, I think that kind of secures in everyone's mind that, hey, prior to 10/1/19, you can still, if you've written them off to a contractual, that should be okay. And that's another topic that we discussed with our S10 work group and gained consensus that there's still kind of a safe harbor, if you will, for providers. I think we had one instance where a provider, the auditor, an auditor, I'm not a WPS auditor in this case, but tried to, take that final rule and then apply it to last year's S10. And but once we brought it up in the S10 work group, that seemed to resolve the issue. But it'll impact this year too, so I just wanted to mention that.
Good deal. Thanks, Ron. So one of the questions that was asked recently is what's the due date for the submissions? So the latest extension we granted globally was for April 5th, and that'll still be the global due date. If for some reason on a case-by-case basis anybody needs a little bit more time to work on something, you can submit a request to your auditor, to the auditor that's been assigned to your unit, and they can put that through as an extension. Just keep in mind, though, we won't be able to just keep extending month after month. Obviously, last year was a unique situation. We were right at the beginning of the public health emergency, and CMS themselves extended things, but they did not extend the end due date, which really caused a lot of crunch for everybody. Same thing is in play this year. We have a 12/31 due date and a large workload, obviously, and a lot of work in between. It's not just one request and then we do the audit and we're done. There might very well be multiple requests for information throughout, and we try to give you 2 weeks whenever possible to submit that information. Some of that takes a while to get, so that's why we have to make sure we get started. But if somebody really does need an extension of some sort, just contact your auditor and work with them. And it looks like we have about 5 minutes left. So any final questions? What I'm going to do again is take all these questions and merge them with the others and send that document out with a quick response in a Word document.
Hey, Chris, just one more thing. As far as a reminder about the surveys that'll come out, just if the providers find this content valuable, we'd appreciate them responding to the survey that we'll send out.
Oh, yes. Thank you very much for your reminder there. So it'll be a SurveyMonkey link. I think I sent one out for those of you that attended the last quarterly provider webinar, not really related to S10, but just a general webinar. I sent one out after that. I'm going to try to streamline that questionnaire a little bit and just cut it down. Just really, we're looking for some feedback. What do you think we can improve upon? What topics? That's always what we're looking for, is what topics would you find helpful for future regular webinars? Of course, we'll have S10, but we also have other audit issues that we bring up. So I will include that in that email as well. Thanks for the reminder, Ron.
You bet.
Okay, so it looks like we are getting close to the end there. What I'm going to do is I'm going to download this recording, and the more I'm thinking about it, we had 2 hours the first time and 1.5 now. I was originally going to merge them, but now that I think about it, a 3.5 hour YouTube video might be a little bit much. So I might still keep them as part 1 and part 2, but I'll send out both links with this email that comes out. Clean them up a little bit and then send that out. So I thank you for your time today. I hope, feel free to pass any of this information on to anybody else that you think would be handy. And I look forward to talking to any of you that might attend our future quarterly webinars. Have a great day.